Here's another episode from the undefeated, undisputed retirement tag team, Joe and Duane. Hey
I love
Joe,
it.
how you doing, Joe?
Doing good. I love how the weather's broken here in southern Indiana. It's kind of 50s at night and low 70s, low humidity. It's a nice time to be in Indiana.
Beautiful, beautiful. Hey guys, we got a good episode for you today. But first, let me give you an update on the no holds barred retirement cage match between us and Rob Berger and Holy Schmidt. So far, no response from their corner yet. Word on the street is that they are intimidated by our vast retirement knowledge and our inherent good looks.
Yeah.
So when we hear anything, we'll let you know. So guys, today we Joe and I were going back and forth on topics, and we decided to talk about the best and worst retirement slash investment advice that we have ever heard. Some of this could be stuff that came from friends, came from YouTube, came from wherever. So it'll be the best and the worst retirement advice that we have ever heard. And for those of you who haven't seen Joe before, please check out his channel. This is one of the channels one of the very few channels that I looked into heavily before I retired. And Joe has given me so much good advice. Look him up at Joe Kuhn Loves Retirement on YouTube. Lots of great videos. So here we go. Joe, let's start with you. Let's go with worst first. Go for the catchy, the bad stuff that'll draw these people in. What is the worst? We can talk throughout the video, maybe you can give a couple examples, but what's the first example of the worst retirement advice or investment advice you've heard?
Yeah. The first one for me is very easy. It's don't retire at 54. That was the first
Ah,
thing that happened to me. I was at the top of my career. I still had one child in college. I was making very good money. And, you know, my Excel spreadsheets and all my studies said I can retire now. And you wouldn't believe the number of people that told me don't do it.
yeah.
One, gosh, look how much more money you'll have if you just work one more year, 2 more years. So it was just, it was 90% of the people told me I was making a mistake. So
Wow.
it took a lot of courage and double checking
Yeah.
to make that leap to retire early. And there's probably some baggage in there with the feedback that I was getting. Like, what do you mean you're retiring? I can't retire. How can you retire? I love my job kind of stuff. And just that was the first obstacle that I had to overcome was, hey, this makes sense for me to retire.
Hey, I could see, especially since you have a family, whereas I'm single, I could see where you could be double, triple, quadruple checking those numbers to make sure that, okay, yeah, you didn't listen to these people saying you can't retire, but probably in the back of your mind, okay, I better be damn sure that I got these numbers right.
I met with 7 certified financial planners.
Wow. Okay.
7, trying to see if I was missing something, if I really should I hire somebody to do my planning. And I met with all 7 of them, and I'm just saying, hey, I'm fine. And the problem, and especially here in the US is, when's enough?
Yeah.
And more is better. And I've lived under my means my whole life, and I was ready to do something different with my time. But that I was overwhelming advice. What are you doing?
Yeah.
What about you?
Yeah. Um, I got two of them. First one I'd say is, I don't know if you've heard about this, the rising equity glide path. That has always, I looked into it, and yes, okay, the data that he took, we're talking about Michael Kitces, great. He's got some great stuff on his blog. The data that he used showed some positive, returns from this. Okay. First thing about data, okay, you can be very selective on data. All right, as we both know.
Yeah.
You as an engineer, me as a number cruncher. Um, but to me, it's like, for those of you who don't know, the rising equity glide path is that as you progress in retirement, you gradually get more and more stocks into your portfolio as opposed to the normal advice where it's like, the older you get, the more conservative you get. Yeah, that's just bad. I just think it's bad advice. I mean, at least from my standpoint, being a pretty conservative investor, the older I get, the more I want to hold on to what I got.
Yeah.
And especially being this channel being a moderate income retirement channel, and I don't know if I would feel comfortable at all playing around with that kind of strategy. Now if you have like $5-10 million in the bank and your expenses are pretty low, sure, I guess. I mean, because there's much bigger upside from doing that. But that to me is just bad advice for me and my viewers.
Man, what I love about that is I've got a slightly different, well, not slightly different, I'll say 180 degrees different than that. For me and what I'm trying to do, I've got a video coming out Sunday on that topic.
Oh, really?
Is
Okay.
because I've been retired 6.5 years, and if I look at my investments, I've got a 12% compounded annual growth rate return. 12%.
Wow.
And it's like, okay, how much do I have to worry about sequence of return risk now? Well,
Right.
I'm not spending 4% now because my
That's
nest egg has grown so much. I'm not spending that. I'm spending in the twos, like 2.7, something like that.
right.
And so the need for fixed assets is not as big. So it's different.
Yeah.
What's the problem with YouTube advice is a lot of people they're hitting everyone. And this is for
Yeah.
the person with $100,000 and the person with 5 million. And virtually nobody fits perfectly some of the advice you hear on YouTube. So you've got to take
Yes.
the information and apply it to what makes you feel comfortable
Right.
in your risk profile. So I love that. And in this, that it's I have a different opinion for me. That doesn't
Right.
make me right for anybody else. And I love that. I love that.
Yeah. And this is, I mean, I've read some more of his stuff and he's brilliant. I mean, I love his analysis. I love his, different postings on things. But for this one, yeah, I'm not going to touch that one with a 10-foot pole.
yeah, and
That's just, to me, it's just too risky. Once you've won the game, you know, keep your
stop playing.
assets.
Yeah, stop playing.
Exactly. That's
I
what I
get
was
it.
looking for. Stop playing. You got it.
Stop playing. I get it.
Yeah.
I get it. So
Okay. What about? Do you have another bad piece of advice that you just
and
can't
again,
stand?
this is the overwhelming advice when you go to a certified financial planner, you get on YouTube, anything you read, what's your portfolio of equity to fixed? 60/40. And I'm like, well, what's that based on? you know,
Yeah.
so
Yeah.
they back tested some of that, but is that with my spending, with my investments? I really don't like bonds. I've hated bonds my whole life. I was 100% in equities till about 5 years before I retired. 100%,
Wow. You
100%
you
zero.
you got a
And
much stronger stomach than I do.
I believe, in people. I believe people are trying to improve their businesses. You can get some dividend paying stocks where people are trying to improve their business all the time versus just buying something that's fixed. And that fixed, it's not really fixed, as we all found out in 2022, right? It's not
Yes.
really fixed. It's
Yep.
can be manipulated up and down. I just didn't feel good about it. So when I created my portfolio, I'm currently like 83-17, 83% equity, 17. I mean, that's not a round number. That's calculated. Well, I just calculated how much I want to be protected from a bear market. And I calculated I want to have 10 years that I need from my investments, net of my income. I got some YouTube income. I got some a small, I got $16,000 a year pension. I got a few things coming in. So what I need from my investments, I got 10 years in fixed, which works out to about 17%. So I got 17%, 83.
Right.
So just going, hey, all the advice, 60/40. Every
Right.
example, 60/40. So I think you got to find out what, how much money you spending, what's your risk profile, what are your debts, what are your legacy plans, what works for you. And, if I felt a lot of pressure not to be 60/40 because of
Oh,
all the
really?
advice.
Yeah. Well, I kind of have to be the 180 of your opinion because that's my target is 60/40.
Yeah.
Even though currently the lowest I've got down when, a couple of years ago when the market was new, I was like 55/45 stock bonds. Now I'm right about 57/43 stock bonds. So I think depending on where you are, depending on the amount of money you have, depending
Yeah.
on how much risk you are okay with, I can see where the 60/40 would be okay for a lot of people like me, because I'm very risk averse
Yeah.
investor. So again, like we talked about just a couple of minutes ago, it totally depends on your situation, where you're
Yeah.
at.
Well, and what's funny here is bad advice for me is good advice for you. And
Exactly.
that's what
Yeah.
makes personal finance. And, I hope that your channel and my channel and our collective work here gets people to understand there's not a right answer that fits every person.
Right. Yep.
Yeah.
I get it.
And we did not collaborate on what our worst advice was going to be. And
No, no, no.
we were both 180 on the last two.
That's perfect. I
That's
love it.
funny.
That'll make our viewers just go, yeah, he's right. No, he's wrong. I'm with Joe. I'm with Duane. That's what we want, Joe. We want
I'm
all this
on Team Duane. I'm on Team Duane.
controversy. Okay, I've got one more on the worst. And this, it's right up there with number one. This could actually, but should have been my number one, probably. You need $1 million to retire.
Oh, yeah.
That is what my whole channel has been based on, is no, you do not need $1 million to retire, especially, and it's still out there. I mean, it's still out there. That's just the common, like you were saying about the 60/40. Another tenet here of retirement and financial, not, more financial channels than retirement channels. Unless you have $1 million, don't even think about retiring.
Yeah.
Well, okay, how much of that is to drum up business for your financial analyst or your financial advisor, right?
Yeah. Keep your
So
money. Don't spend it.
yeah, so it's like, that's always been a pet peeve for me. And again, that's what I base my whole channel on, is no, you don't. I retired a little over half of that. So depending on, the whole thing to me is expenses. If you can keep your expenses low, and the most important word, flexible, you can retire on just about anything. I've had comments from viewers. I retired on 150,000. I retired on 300. Good for you. If you've got really low expenses, you can make almost anything work. With your Social Security, put that with your, let's say, 300,000, and your expenses are low, and you're living in a low cost of living area, and you can retire. I retired a little over 500. You can retire on less than I did. So that is always stuck in my craw, that
Yeah.
the $1 million thing, you know?
Yeah, Duane, I 100% agree with you. I hate these videos and they're so popular. Like, you need 2 million, or net worth by age. And are you ahead or behind? Is Jim ahead of Jane? And you're
Yeah,
behind if you don't have 1.5 million at age 60. I hate those videos because they're meaningless. It
yeah,
all starts with your expenses. I've talked to people, that had $5 million and they didn't have enough money. And I talked to people with
yes,
250,000, that had a great pension and Social Security, and they were fine.
yeah, yeah. It's amazing how that works. Okay, let's jump to the best. Let's say hopefully we can get to two of them, but what's your best piece of advice on retirement/investing that you've heard?
Yeah, this is one that I repeat a lot, and I got it from a friend of mine. I didn't originate out there in YouTube universe. It was, don't go it alone.
Yeah,
And that you have blind spots and misunderstandings. And this is why, about 6 months before I retired, we started a retirement group. There's three of us in this group. And, I'll start saying, well, here's when I'm thinking about taking Social Security. Here's how I'm thinking about bear markets and how much I need to be prepared for. And then they would challenge me and say, what are you doing that for? Here's what I'm doing. And we're all different. One of the guys is very conservative, one's real aggressive. I'm actually in the middle.
Oh,
And
okay.
so we would go through my expenses and they would say, gosh, you're spending, why do you have life insurance, Joe? In your situation, why are you paying $200 a month for life insurance? And that was one of the bigger ones for me. And then we share things like Social Security was a big one. That's a big debate that we're still kind of going through. We're all doing different things,
Yeah.
but having somebody to bounce ideas off of, especially when the market goes down 30%, we'll get together and they'll say, hey, what are you doing? And every single financial move I make, every one, okay, anything that I'm pulling out of my bucket two money and putting in bucket one, or I want to invest in I bonds or take my allocation from 80-20 to 85-15, our rule is you have to sell it to the other two guys.
Oh, that's
Now,
smart. Okay.
it's not a consensus vote. You still get to decide, but you have to go through the process of explaining it. And you don't want to explain that, well, the market's down and I'm scared.
Yeah. Yeah.
They would say, hey, Joe, you got a plan for this. You got a plan. So I love that retirement group. And just doing it by myself, I wouldn't have near the confidence.
That's great. I remember hearing you talk about that in a couple videos,
Yeah.
and that's great. I don't have that personally, but the first time you brought that up, I was like, yeah, that's a great idea. I
Yeah.
should look into that. Haven't done it yet, but hopefully I will in the future. But that's a big one. That's a big
Yeah.
one. I would say my first one is buy and hold. That is the best piece of advice I've ever gotten. When I first started investing at 35, I would invest in, and back then, it's like I was just kind of putting stuff in. I wasn't even going up to my company match yet, and I was like, oh, okay, I'm going to start investing. What individual stocks can I look at investing in? I would invest, back at the time, it was a couple $100. What can I invest in? And then if they started tanking, or not even tanking, going down in a week's time, I would take all my money up, put it into another individual stock. And I was doing this for probably a couple of years, at low, luckily it was at low monetary value because I had just started investing. But then I ran across that buy and hold, buy and
Yeah.
hold. And yes, it can be boring. Like most of my stuff is in target date retirement funds. Nothing too exciting about that. It's mostly index funds. But what I tell my viewers is that if you want to take a small portion of that, let's say 1 or 2% and play around, take a little, put it into crypto, take a little and put it into whatever
Yeah.
the next hot thing is. If that's going to allow you to have that excitement, with your investing, go ahead and do it. But I got to tell you, when I first retired, 6 months later, stock market started going down in 2022. If I would not have stuck to my buy and hold principles and I have to admit it, at times it was tough to stick to that. If I would not have held on to that, I would not be where I am now. And I haven't done my latest monthly portfolio yet, but I'll bet you this month I'm going to be at where I was or maybe a little above when I retired. And I attribute all of that to buy and hold.
Yeah, absolutely.
What
Absolutely. And
about
you had a big challenge, like you retired at the beginning of 2022, you know,
actually early 2020 or late 2021?
yeah. Well, yeah. So you were just about to fall off a cliff, like all of us did.
Yeah.
The advice that I, love that I still follow today, and it's hard, and it's related to what you said, is don't chase returns.
Yes.
And what I mean by that is in retirement, you're not trying to get the maximum return. So I'm not schizophrenic from what I said earlier. It's like, have a little conservatism in your portfolio, but like bonds, but it's like Bitcoin. Oh my gosh. I don't have any
Yeah.
Bitcoin.
I don't
I'm
either.
fear of missing out, right? So just chasing the whatever's hot, the Magnificent Seven, you know, those are going to fall sometime. I'm not sure how far, but the valuations are pretty high on those. So just the discipline to say, I say this a lot in my sleep. I'm not trying to maximize returns. I'm not trying to maximize returns.
That's funny. You
That's,
say it in your sleep.
yeah, yeah. Safety first. And then, that's why I've studied bear markets. I studied how long it takes to recover from a bear market. And I figured, hey, if I have 10 years, I can recover from just about anything.
Yes.
I don't, I've gotten 12% since I've retired, 15, 18. It's not worth the risk right now to chase, hey, gosh, I made gold is up like 50% for this year. Oh, let's go buy gold.
Yeah.
So that discipline to not chase returns is some great advice. I wish I could attribute that to one person, but I've heard that from so many people, and it really ties into what you said, or around buy and hold. Buy what you like, and then just let it go.
Yep. You have any other best advice?
Something I've said a lot in my early content was retire to something, not from something. And
Yep.
it's a little bit, subtle, the message inside of there. People, yes, you can retire and then just figure it out. You could do that. Absolutely fine. But the problem is when you're on the precipice of retiring, you're there 2 months ahead of time, a month ahead of time. The stupidest thing I did was retire financially. That was
Yeah.
dumb.
Yeah. Yeah.
So when you're at those moments of doubt, like, well, maybe 6 more months, maybe another year, you got to get excited about what you're retiring to. I
Yeah.
got awful excited about some vacations I had planned. Oh my God, I had 3 already paid for and planned out vacations in my first year. And then I was going to do nothing for 6 months. And then nothing like creative or business wise. And then I was going to start consulting in reliability and maintenance 1 week a month. And I started getting excited about starting my own business, doing this little consulting. I loved coaching and mentoring people. I had no idea about a YouTube channel, by the way. But, there you go. It was just retire to something. It's something to get excited about and say, man, I want that. I want the freedom of time. I want this. I want this trip. We went down to Mexico. Uh, I needed that shove to
Yeah.
jump out of the airplane.
Yeah.
What about you?
No, no, that's great. I, I would say there's a couple things I can mention, but I would say when someone, when I first retired, I heard someone say it's all about expenses. And this is something that we just mentioned like 5, 10 minutes ago, but it's true. It's along with buy and hold. It's all about expenses and keeping your expenses low. And the key word is flexible. If you can keep those expenses, no matter how low they are, if you are, if you retire on in this case, this channel, moderate income, and you go through a bad market, if you can reduce those expenses without too much pain, that's going to take you a long way. Now, I'm not saying, okay, cut out, instead of eating 3 meals a day, I'm going to eat one. No, but it's like if you can cut out, like, I don't know, certain streaming services that you don't really watch that much, just
Yeah.
something simple like that. If you do that, if there are a bunch of little excess you can cut out on your expenses without too much pain, you're in a good spot. And especially being single. I mean, I've been in a 22-year long relationship, committed relationship, but my retirement planning is just for me. My girlfriend has her own retirement planning. She is going to be well off. Her house is paid off. She's going to be doing good. So she'll be retiring. I believe we're trying to get her to retire by next summer. But for me, if it's just my money here and we go through a bad market, man, I can cut down a lot on my expenses because number one, they're low, and number two, they're flexible. So the key
Yeah.
word for me there is flexible.
Yeah, absolutely. And I think often people underestimate their ability to adapt.
Yes.
You've adapted your whole life. Why would you not be
Yeah.
able to adapt in retirement to whatever
Yeah.
comes at you? If you have a plan and it works on paper today, it's really kind of outdated tomorrow. And
Yes.
it's not, who's got a plan that lasts for 30 years? Yes,
Yeah.
it's a snapshot in time, but your ability to adapt and
Yeah.
reduce cost, maybe get some part-time income.
Yep.
You know, especially when you're in your 60s and early 70s, I think you have an opportunity to do that. But great. So, hey, we're about 26 minutes right now, just as a time check.
Okay, why don't we just wrap it up? I mean, unless you had a couple more answers to
Now,
that
why
best
don't you
before.
give me one more worst advice? One more.
One more word. Don't start a YouTube channel. You know what, Joe? When I was thinking about doing this, because I looked at, creators in our genre, creators in other genres, and I was going, okay, if they can do this, and I looked at how many subs they had, some of them even said how much money they were bringing in monthly. I'm like, okay, I can do what they're doing. If I could just keep, because both of us, minimal, if no editing, right? If I can just put up an iPhone and just film myself, I can do at least as good as other people. But then I had other people going, oh my God, what are you thinking about doing? A YouTube channel? Are you crazy?
Yeah.
So that
Especially
helped me
family
back.
members.
Yeah.
What are
And
you
that helped me
doing?
back.
What?
That helped me back a little bit at first, but I am glad I didn't listen to that, because I'm sure you feel the same way. I am getting so much enjoyment, and it is giving me, it's giving me a sense of purpose. Not that this is all that's driving me on, but it helps. It really helps because of the feedback I get from my community.
Yeah.
Hopefully, I might be helping some people in some ways. That for me creates a purpose. I'm also bringing in a little bit of side income, what I like to call peace of mind money. I did a video a couple months ago. Could I get by without my YouTube income? Yes, I could, but this gives me additional peace of mind. So
Yeah.
I would say not listening to the naysayers on the YouTube.
Absolutely. I could say the same thing. I actually had that down at, a little bit lower as great advice I got. Somebody on another YouTuber said, man, you can do this. It wasn't talking to me.
Oh,
He was talking to his audience.
okay.
And it was Josh Scanlon in the money space here.
Yeah,
And I just said, yeah, let me do that. And, but I started with reliability and maintenance. If you look at my old videos, that's
yeah,
somewhere that I had an expertise. It's been a ball. If you like helping people, if you like
yes.
coaching, if you like mentoring people on a totally flexible schedule, that's
Oh, it's
what's
great.
that's what's good
And
about YouTube. I don't have an appointment at 9 o'clock. I
yeah,
I'll make videos whenever I want. Lately,
yes.
I've been making my videos all on one day. I'll make them
Oh,
like a
really?
Wednesday afternoon. Takes me about an hour to make each video,
Yeah,
upload everything. So I'll make 3 videos in 3 hours on a rainy day.
yeah,
It's
yeah,
just, it's been great. And especially the community. I'm telling you, I feel I've gotten to know so many people, including you. I would have never met you. We'd never be
yeah,
talking.
yeah,
And,
exactly.
I have a ball talking to you. You send me texts through the week. And
Yeah,
this is a great way to make an impact on people, to give back, to have fulfillment there, and it's infinite flexibility.
yes, I totally agree. Okay, guys, that's what we got this week. For those of you, please, that haven't seen Joe before, please go to Joe Kuhn Loves Retirement. Check out his channel. He's got a lot of videos on there. Joe, how long you been doing it? 6 years?
6 years, yeah, a little over 6 years.
Okay, so guys, he's got tons of great material on there that you can delve in, man. You can delve in for the next 2 weeks for 3 hours a day if you want. So go check out Joe's channel. I'm sure most of you know Joe, but if you don't, please check it out. And as always, we got this.
Thanks a lot.
Thanks, Joe.